welcome to Tax Guide, your go-to guide for decoding the ITR maze. With the filing deadline just around the corner, the rush is on. But here's the big question. Are you filing your returns right, or are you leaving money or compliance on the table? Today, we are focusing on two of the most overlooked sections while filing your income tax return. We'll be talking about how to file income tax from capital gains, plus smart ways to set off capital losses so you don't lose out on tax benefits. Whether you're a salaried employee with a few mutual funds or someone who just sold a property, this episode is packed with practical insights that could make a real difference to your tax bill. So all you have to do is just grab your pen and paper, and let's simplify your ITR one section at a time. And I have with me Tarun Garg from Deloitte to talk on this. Tarun, hi, welcome to the show. Okay, so let's just understand what comes under capital gains, and if you could just help us identify the transactions that come under it, and how do you know if it is a short term or a long term?
Show. So, Kavita, you have raised a very important question. What is a capital gain? Now, capital gain is essentially is the fourth source of income and fourth head under income from the overall sources. So, the other heads being, we know that income under the head salary, income under the head house property, income from gains from business and profession, and then comes the income from capital gain, and the last source being income under the head residuary or the other sources. So now, what is a capital gain? There's a subtle difference. No, now see, you have to be an investor, and for which you are basically investing into some assets, be it properties, be it mutual fund, share securities, and the purpose behind it, not as an income you are, or so sort of source of business you are doing it. It's just your, say, passive income, and you're doing that. And if that be the so, then whatever investments you are making, and then if you are earning any gains out of those investments, be it if you are investing into properties, if you are investing into share securities, bonds, debentures, or even if you are a purchaser of gold, and be it physical gold or gold bonds, mutual funds, and all. So then such gains that you earn from the sale of such assets becomes your capital gain, and then has to be reported appropriately in the income tax return.
All right, so now let's understand, how do I file capital gains from stocks or mutual funds in the ITR, and how about capital gains from selling property or gold?
Now, yeah, so see, Kavita, up until now, when we see the past year's returns, so previous years for financial year 23-24, there was no provision wherein you can report the capital gain income under ITR 1. Now, for financial year 24-25, relating to the assessment year 25-26, there is an important, I would say, a welcome change that the authorities did in the ITR form, whereby they allowed, if you have some gains from mutual fund securities, and that gain is up to, say, 1.25 lakh, and provided these securities are Indian securities, meaning by you have not invested into foreign securities, and on which the securities transaction tax has been levied, then you can file your ITR 1, and within ITR 1 such gains can be reported. But if your gains are in excess of that 1.25 lakh limit, then mandatorily you are required to go into ITR 2 and file and report that under income from capital gain sources. We call it CG schedule. There you have to report it. Similarly, if you have sold, say, gold or your properties, there also all those reportings have to be done into ITR 2. It is important now again to see what kind of gain it is. Is it a short-term gain or a long-term gain? And there are certain provisions around it. So the period of holding for say properties, gold, is basically, if you are holding them for 2 years or more, then it will be categorized as a long-term asset, and accordingly it will be reported as a long-term gain. And but for share securities, mutual funds, if these are listed, then the period of holding is, say, 12 months. If you're holding them for 12 months or more, then such gains shall be classified as a long-term gain, and accordingly needs to be reported in the ITR form.
Anyway, we can use indexation to reduce capital gains tax?
No, so see, again, very important point. So, with effect from 23rd of July 2024, which is the last budget, the final budget that was announced after the government was formed. So, the indexation benefit is typically being taken away, and the reason for that is they have really rationalized the capital gains rates. So, the capital gain rates now stands at 12.5% for long-term assets, and if it is a short term asset then it is 20%. So it depends upon what kind of gains it is. You need to assess that depending upon the period of holding. But if your gains is prior to 23rd of July 2024, which means in the first quarter of April till that period, then you can still see whether that indexation benefit will be beneficial for you, and accordingly you can compute your gain. Because this is then will be governed by a separate section, which is section 112. Accordingly you can see, say on properties, whether you would want to go for that benefit or not.
Some platform specific questions while filing on the income tax portal. How do I fill out the schedule CG for capital gains? Is it necessary to report ISIN codes or script wise details for listed shares?
Yeah, so very important, Kavita. What happens is that if such share securities have been purchased prior to say 2020, when these grandfathering provision had come, then clearly the authorities are asking for you those ISIN code. And if you do not report, then again the portal does not specifically allow you to file that return. But if such securities have been purchased post that grandfathering provision was had come into place, and then sold also after that date, which means that you've purchased that asset after 2020 and then sold also say in 2024, then such provisions won't be applicable, and then even without ISN code you can kind of fill, because the securities and portal can automatically pick up those required details, Kavita.
About capital losses and the way you can set off. So, how can you set off losses from stock against gains from property or mutual funds? And also, I want to understand the technicality behind carrying it forward. So, if I cannot set off my capital losses this year, can I carry them? Forward, and what is the condition for carrying forward the losses? Does it require filing the return before the deadline?
Yes, again, important aspect that you have kind of raised. See, carry forward provisions are applicable where if you're not able to set off your losses within the current year itself, and your other gains, capital gains, is not sufficient to set off those losses within the current year, then the provision basically allows you to carry it forward for 8 subsequent assessment years, provided you file your return of income on time. Now, that is one aspect. Now, other question that you raised was that if you have invested into, say, securities, shares, mutual funds, and then you've earned gains out of them, can there is a way that you can still exempt that gain? Now, the provision is there. There is a really kind of a secret section, I would say, and people often tend to miss that out. That is section 54F, which says that if you have gains from such sale of mutual fund securities, and if you have one other house property and you are investing into another house property, then the gains from such sale of mutual funds securities can be set off, or rather I would say it can be invested into those types of asset, and there will be no sort of a additional tax on such gains. But there are certain guardrails and conditions which are laid down into that section, and such conditions are that you should only be holding one other house property, and the entire gain from the sale of such securities mutual fund must be invested into those sale, or rather purchase of the new house property. So these are some nuances that needs to be taken care of, Kavita, while filing the return.
Tarun, now let's talk about viewer queries. And we have Ravi's question from Maharashtra. He says that I made a loss selling mutual funds this year. Can I adjust that against gains from property, and how do I report it?
Well, very well, you can do that. So, if you have a loss from the mutual funds and then you have a gain from the property, you can very well adjust that and then set off that. But provided the category of gain should be the same, in the sense that if you have a loss from the mutual fund, which is in the nature of a long-term loss, and the gain from the secure property is also a long-term gain, then both the gains can be adjusted against each other. But if the loss is a short term loss and the gain is also rather I would say short term gain, then also can be adjusted. But if vice versa is happening, in the sense that say your loss from the mutual fund is a long term and the gain from property is a short term, then the provision doesn't allow, because short term gains from the secure property is taxed at a higher rate versus the long term gain. So authorities have devised their provision in such a way that you cannot set off a long term I would say a loss against a short term gain.
Love Saxena, he's asking that he forgot to file last year's return, and also, can I still carry forward last year's capital losses? He wants to understand how do I report all this in his ITR.
Also, that's a real unfortunate situation. So, if supposedly a taxpayer has missed to file the ITR within the timeline, then unfortunately, as such, there is no provision to carry forward such losses. Had that been a house property loss, still there is a provision that you can file a revised return and then you can do that. But now, unfortunately, that revised return timeline has also been lapsed. But now, under the updated return, as such, there's only a provision that you can report your income which has not been offered to tax or you forgot to file that can be reported. But unfortunately, in such circumstances, that losses will be a foregone loss or you cannot claim any benefit. But I would suggest that at least for this year, you try and file your return of income on time. And if you still have current year losses, those losses can of course be carried for first set off, and then if you do not have sufficient income, can be carried forward to the subsequent assessment years.
All right, Arun, I think that will be all for today. And thank you so much for joining us every day on our very special segment, Tax Guide. And hope to see you tomorrow again with more details and solutions for our viewer queries. Thank you so much.
Thank you.